Welcome back to Talk Tickers. Earnings season is in full swing,
It is.
and we're diving deep into Flywire's Q4 and full year 2024 performance.
Yeah, they've had quite a year.
Yeah, navigating a choppy economic landscape and facing some unexpected headwinds.
Definitely some headwinds.
But before we get into the nitty-gritty,
Yeah.
I'm really curious to hear your take on the overall picture.
Sure.
What were the big takeaways for you?
Well, I think the big story here is that Flywire managed to pull off a 17.4% year-over-year revenue growth,
Pretty impressive.
reaching $112.8 million in Q4.
Yeah, not bad at all.
What's interesting is that this growth happened despite some pretty major challenges,
Right.
especially with all the visa policy changes that have been making headlines.
Yeah, those visa changes seem to be a big focus in the call.
They were a big focus for sure.
But 17.4% growth is nothing to sneeze at.
No, it's not.
Didn't they miss their revenue projections, though?
They did fall a bit short of their own guidance.
Okay.
And that's something Wall Street always pays attention to.
Yeah, for sure.
However, their adjusted EBITDA was strong,
Okay.
almost hitting their target.
So it sounds like they're focused on maintaining profitability,
Exactly.
even amidst the challenges.
Yeah, even amidst all those challenges, which is, a really positive sign.
Yeah, definitely a positive sign in this economic climate.
Definitely.
So let's unpack those headwinds a bit further.
Okay.
The education sector seems to be the biggest pain point, right?
Absolutely.
Yeah.
Those visa policy changes had a direct impact on Flywire's education vertical,
Right.
especially in Canada and Australia.
I was going to say, I'm guessing Australia wasn't spared either.
Australia felt the impact too,
Okay.
though not quite as severe as Canada.
Got it.
They saw a 50% year-over-year decline in education revenue.
50%. Wow.
Yeah, it's a significant hit,
That's massive.
directly attributable to those new visa rules.
Wow.
Yeah, in Canada.
So a tough environment for education.
Very tough.
But surely there are some bright spots.
Yeah, there's some bright spots.
Yeah. Otherwise, that 17.4% growth wouldn't be possible.
Right, you're right. It's not all doom and gloom.
Okay, good.
Flywire's education business in EMEA and the UK is thriving.
Interesting.
They're seeing over 50% year-over-year revenue growth in those regions.
Wow. So even with all the visa challenges, they're proving they can still compete and win.
Exactly. And what's fascinating here is they're not just surviving.
Right.
They're winning major deals with prestigious institutions
That's great.
like Oxford University.
Wow. Okay, that speaks volumes about their market position
It really does.
and the strength of their offering.
Absolutely.
But let's move beyond education for a moment.
Okay.
What's the story with their travel vertical?
Travel.
I heard that's becoming a real growth engine for them.
Get ready for takeoff because travel is absolutely soaring for Flywire.
Really?
It's now their second largest revenue generator,
Wow.
surpassing even healthcare.
So they're really tapping into something there.
Yeah, they are.
What's driving that kind of performance?
Well, they're expanding aggressively into new markets
I see.
because of Indonesia and Chile.
Okay.
But it's not just about geographic expansion.
All right.
They're also winning over some impressive clients in the luxury travel space.
Interesting. So they're not just dipping their toes in.
They're going all in
They're going all in.
on travel.
And speaking of going all in, they made a pretty big splash with that Certifi acquisition,
Yeah,
didn't they?
they did.
That seems like a bold move, even for a company that's known for its growth ambitions.
It's a significant acquisition.
Yeah, for sure.
And it signals their commitment to becoming a dominant player in the travel industry.
Yeah.
Certifi is a major force in the hotel sector,
Right.
giving Flywire direct access to over 20,000 hotels globally.
Wow.
We're talking about billions of dollars in potential payment volume here.
That's huge.
It's a game changer,
Yeah.
especially for their travel vertical.
Okay, so they're doubling down on travel, and it seems to be paying off.
It does.
But I'm curious about healthcare. Didn't that used to be their second largest segment?
It did.
Did something change?
Healthcare had a bit of a slower year in 2024.
Okay.
It's still a solid part of their business.
Yeah.
But the growth wasn't as explosive as what we saw in travel.
So what's the outlook for healthcare going forward?
Wow.
Did they provide any insights on that during the call?
They're actually quite optimistic about a rebound in 2025.
Interesting.
The big news here is they secured a massive new client,
Okay.
a major hospital system
Got it.
that will be implementing Flywire's products later this year.
So a bit of a waiting game for healthcare, but with some serious potential on the horizon.
Exactly.
What about their B2B segment?
Okay, B2B.
How did that perform?
B2B continues to be a winner for Flywire.
That's good to hear.
They're racking up impressive wins,
Okay.
including a major deal with Cvent,
Interesting.
one of the leading names in meetings and events software.
So across the board, it sounds like they're strategically positioning themselves for growth.
They are.
Even with those bumps in the road, especially in education.
Especially in education, yeah.
But with all these moving parts, how are they approaching cost management and operational efficiency?
They're definitely taking a proactive approach.
That
They announced a comprehensive operational review
nice.
aimed at streamlining their business and maximizing efficiency.
Right.
They're also implementing a restructuring plan,
Right.
which unfortunately means some job losses.
Yeah. Those decisions are never easy.
Never easy.
But it sounds like they're being very strategic about how they allocate resources.
They are.
But with all these challenges and opportunities,
Yeah,
are they still optimistic about the future?
absolutely.
Okay.
Despite the headwinds, Flywire remains bullish on their long-term growth potential.
Good.
They're not just talking the talk. They're putting their money where their mouth is by continuing to invest in product innovation, data, and AI.
That's encouraging.
Yeah,
So they're staying agile, adapting to the changing landscape.
exactly.
That's a good sign.
It is.
But let's be realistic. There are always risks to consider.
Mm-hmm.
What are some of the key factors that investors should be watching closely?
You hit the nail on the head.
Okay.
The biggest question mark is those visa policies.
Right.
If those restrictions continue or even worsen,
Yeah.
it could put a serious damper on their growth, especially in the education sector.
So visa policies are a wild card.
A big wild card.
What else is on your radar?
The integration of Certifi is another critical factor.
Okay.
It's a major acquisition,
Right.
and any hiccups in that process could disrupt their growth plans.
So integration risks are always something to watch out for
Always.
with acquisitions.
Yeah.
Anything else that could potentially impact their performance?
The competitive landscape is another factor to consider.
Okay.
The payment space is getting increasingly crowded,
Right.
with new players emerging all the time.
Makes sense.
Flywire needs to stay ahead of the curve,
For sure.
constantly innovating and differentiating their offerings to maintain their competitive edge.
Okay, so visa policies, integration risks, and competitive pressures.
Those are the big ones.
Those are definitely some key challenges.
Yeah.
But let's flip the script for a moment.
Yeah.
What are some of the potential catalysts that could propel Flywire to even greater heights?
Well, if those visa restrictions ease up or are reversed, that would be a huge win for their education business.
Yeah, that would definitely be a game changer.
Yeah, we could see a significant rebound in those key markets,
Right.
which would be a major boost to their overall revenue.
Okay, what about the Certifi acquisition? What's the upside potential there?
If they can successfully integrate Certifi
Uh-huh.
and capitalize on those cross-selling opportunities, it could unlock tremendous value.
I see.
They'll have access to a vast network of hotels,
Right.
expanding their reach and revenue potential within the travel industry.
So a potential surge in education revenue and a successful Certifi integration.
Yeah, those are the major catalysts to watch.
Those are the major catalysts to watch. Anything else that could provide a boost?
Their ongoing investments in innovation data and AI could give them a significant competitive advantage.
Right.
If they can leverage these technologies effectively, it could enhance their offerings, improve efficiency, and drive further growth.
So it sounds like they're thinking long term,
Definitely.
which is encouraging.
Yeah.
But before we wrap up part one,
Okay.
I'd love to get your take on their financial performance in a bit more detail.
Sure.
Can we delve into the numbers a bit further?
Absolutely. Let's break down their revenue streams, margins, and profitability in the next part.
Sounds good. We'll be back in a moment to continue our deep dive into Flywire's performance.
That's good.
Stay tuned.
All right. Welcome back to Talk Tickers. Let's continue our deep dive into Flywire's recent performance. We've already talked about some of the big picture challenges and opportunities,
Right.
but now I'm eager to get into the nitty-gritty of their financials.
Yeah, the numbers definitely tell a story,
They do.
and I'm curious to hear your take on them.
Sure.
Let's start with revenue.
Okay, revenue.
They generated $112.8 million in Q4,
Yeah.
which, as we mentioned, represents a 17.4% year-over-year growth.
Mm-hmm.
But we also know they missed their guidance.
Right.
Can you shed some light on what drove that discrepancy?
Well, it's a combination of factors.
Right.
Currency fluctuations played a role, shaving about $3.3 million off their projected revenue.
Okay, currency headwinds.
But the real culprit was the Canadian education market.
Right.
Those visa policy changes we discussed earlier had a significant impact,
Yeah,
leading to a $3 million shortfall compared to their projections.
got it. So currency headwinds and the Canadian education slump were the main factors.
Pretty much.
But it's interesting that they still managed to achieve such strong overall revenue growth.
Yeah, It is.
Can we break down the revenue streams a bit further?
Sure.
Curious to see how those different segments are performing.
Absolutely.
Okay.
Their revenue is comprised of two main streams.
Okay.
Transaction revenue and platform and other revenue. Transaction revenue, which comes from fees on payment volume, grew by 16.6% year over year.
Okay.
This growth was fueled by a remarkable 32.8% increase in transaction-related payment volume.
Wow, that's a big jump.
It is. I think it's worth pausing here to explain what this means.
Yeah, for sure.
Essentially, it signifies the total value of payments processed through Flywire's platform.
Right.
The fact that this volume surged so dramatically indicates strong demand for their services,
Yeah.
especially in areas like EMEA and UK education, as well as their travel segment.
That makes a lot of sense given the strong performance we saw in those areas.
Exactly.
So transaction revenue is clearly a major driver.
It is.
What about their platform and other revenue stream?
Okay.
What does that encompass?
Well,
and how did it perform?
This segment includes software fees, contributions from recent acquisitions like StudyLink and Invoiced, and growth in their healthcare vertical.
Okay.
It also performed well, growing 21.9% year over year.
Not bad.
This diversified revenue stream adds stability to their business.
Right.
And demonstrates their ability to generate income from multiple sources.
So a mixed bag on the revenue side.
Yeah.
With some clear challenges, but also some impressive growth.
Yeah, there's definitely growth there.
Overall, they're still demonstrating solid progress.
Is it? Say so.
But revenue is only part of the story.
Right.
Let's shift gears and talk about profitability.
Okay, profitability.
How did their margins look?
Their adjusted gross profit was strong, coming in at $75.6 million.
Right.
A 19.1% increase year over year.
So margins are expanding.
Even more impressive is that their adjusted gross margin expanded to 67%.
Wow.
Up 90 basis points compared to Q4 2023.
That's music to any investor's ears.
It is.
How did they achieve that?
They've been incredibly strategic about optimizing their payment costs.
Okay.
They've also benefited from some favorable currency exchange rates during transaction settlements.
Interesting.
It's clear that they're paying close attention to the details and making smart decisions to improve their profitability.
Smart moves indeed.
Yeah.
And speaking of profitability, let's talk about adjusted EBITDA.
Okay. Adjusted EBITDA.
That's always a key metric for investors.
Definitely.
How did they perform in that area?
Adjusted EBITDA landed at $16.7 million.
Okay.
A significant jump from $7.7 million in Q4 of the previous year.
Wow, that's a big jump.
What's even more impressive is that their adjusted EBITDA margin expanded by nearly 700 basis points year over year.
700 basis points.
Yeah, for those who might not be familiar with this metric,
Right.
adjusted EBITDA essentially reflects a company's core operating profitability, stripping away things like interest taxes, depreciation, and amortization.
Right.
The fact that their adjusted EBITDA margin expanded so dramatically is a testament to their operational efficiency
Yeah.
and focus on driving profitable growth.
Wow, that's some serious margin expansion.
It is.
It really does seem like they're striking a balance between investing for future growth and maintaining financial discipline. I think that's a fair assessment.
But it's one thing to talk about profitability in general terms. I'm curious about the specific steps they're taking to manage costs and improve operational efficiency.
Sure.
Did they highlight any initiatives in those areas during the call?
They did. They announced a restructuring plan
Okay.
that will unfortunately impact about 10% of their workforce.
Right.
It's never easy to see job losses.
No, it's not.
But this move, along with their ongoing operational review, demonstrates their commitment to creating a leaner and more agile organization.
Yeah.
They're also exploring ways to optimize their vendor costs,
Yeah.
consolidate systems,
Got it.
and leverage economies of scale to further reduce expenses.
It sounds like they're leaving no stone unturned when it comes to cost control.
It seems that way.
But managing expenses is only part of the equation.
Right.
What about their capital allocation strategy?
Okay, capital allocation.
How are they deploying their resources to generate long-term value for shareholders? They continued their share buyback program in 2024, repurchasing 2.3 million shares for a total of $44 million.
Okay.
This leaves about $100 million remaining in the current authorization.
So they're committed to returning value to shareholders.
It seems that way. And remember that significant Certifi acquisition we talked about earlier?
I did.
They financed that strategically,
Okay.
using a combination of cash on hand and their existing credit facility.
Interesting.
This approach helps preserve liquidity for other corporate purposes,
Right.
including potential future share buybacks.
It sounds like they have a well-thought-out capital allocation strategy,
Yeah, I'd say so.
balancing investments for growth with shareholder returns.
Yeah, good balance.
They're clearly playing the long game here.
They are.
But of course, no investment is without risk,
Right.
and we need to consider the potential downsides as well as the potential rewards.
Absolutely. It's crucial to look at both sides of the coin.
Right.
While Flywire has a lot of things going for it,
No.
there are some potential pitfalls investors should be aware of.
Okay.
Let's discuss those in the next part.
That sounds like a good plan. We'll be back after a short break to wrap up our deep dive into Flywire's performance. Stay tuned. Welcome back to Talk Tickers. We're wrapping up our deep dive into Flywire's Q4 and full year 2024 performance. We've covered a lot of ground, from their overall revenue growth and strategic acquisitions
We have.
to their impressive margin expansion and disciplined capital allocation strategy.
They've had a good year.
But as with any investment,
Right.
there are risks to consider
Absolutely.
alongside the potential rewards.
Yeah, look at both sides.
What are some of the factors that could potentially derail Flywire's plans?
Well, we've touched on this throughout our conversation,
Mm-hmm.
but it's worth reiterating, those visa policies remain a major wild card.
Yeah, it's definitely a cloud hanging over their education segment.
It is.
What other potential pitfalls should investors be aware of?
The integration of Certifi is crucial.
Right.
It's a substantial acquisition, and any missteps in that process could disrupt their growth trajectory.
For sure.
They need to ensure a smooth transition
Right.
and effectively leverage Certifi's platform and customer base
Okay.
to unlock its full potential.
So integration risks are inherent
Oh, yeah.
in any acquisition,
Big time.
and this one is no exception.
Yep.
So visa policies and integration risks are two key areas to watch.
Two big ones.
Anything else on your radar that could impact Flywire's performance?
The competitive landscape is another factor to consider.
Okay, the payment space.
Yeah, it's becoming increasingly crowded and competitive.
So they're going to have to stay on top of their game.
They can't afford to rest on their laurels.
So visa policies, integration risks, and competitive pressures.
Yep, those are the key challenges.
Those are the key challenges. But let's flip the script and talk about the potential upside.
Right, the upside.
What are some of the catalysts that could propel Flywire to even greater heights?
Well, if those visa restrictions ease up or are reversed, that would be a huge boon for their education business.
That would certainly be a game changer.
We could see a significant rebound in those key markets,
Right.
which would be a major catalyst for growth.
Okay, what about the Certifi acquisition? What's the upside potential there?
If they can successfully integrate Certifi and capitalize on cross-selling opportunities, it could be transformative.
Okay.
They'll gain access to a vast network of hotels,
Right.
expanding their reach and revenue potential within the travel industry.
So a potential surge in education revenue and a successful Certifi integration.
Those are two major catalysts to watch.
Those are two major catalysts to watch anything else that could provide a boost.
Their ongoing investments in innovation data and AI
Right.
could give them a significant competitive advantage.
If they leverage those correctly.
Yeah, if they can leverage those technologies effectively, it could enhance their offerings, improve efficiency, and fuel further growth.
It's always exciting to see companies embracing innovation and looking towards the future.
Definitely.
Okay, before we wrap up,
Yeah.
it's time for our favorite segment.
All right.
This is not financial advice,
The disclaimer.
where we let our imaginations run wild and pitch some outrageous but plausible trade ideas
Let's do it.
based on what we've learned.
Okay, I've got one.
What's got you fired up today?
All right, here's my speculative take.
Okay.
Given the potential for a rebound in the education sector and the explosive growth we could see in travel thanks to Certition,
Uh-huh.
I'm thinking a long-term bull call spread on FLYW.
Ooh, a bull call spread that's a bit more nuanced than our usual call option play.
It is a little fancier.
Walk me through this.
Essentially, we'd buy a call option with a lower strike price
Okay.
and simultaneously sell another call option with a higher strike price,
Got it.
both with the same expiration date.
Okay.
This strategy allows us to participate in potential price appreciation
Right.
while limiting our potential losses.
So we're bullish, but also setting some boundaries on our potential losses.
Exactly. We're bullish on Flywire's long-term prospects, but we're also acknowledging the inherent risks.
I like it, but remember everyone, this is purely hypothetical
Of course.
and for entertainment purposes only.
Always.
We are not financial advisors.
Nope.
And this is not financial advice.
Never.
Always do your own research and consider your own risk tolerance before making any investment decisions.
Couldn't agree more. The market is full of surprises.
Always.
And past performance is never a guarantee of future results.
Wise words. All right, listeners. That wraps up our deep dive into Flywire's Q4 and full year 2024 performance. It's a company navigating a complex landscape, facing challenges, but also seizing opportunities.
For sure.
We'll be keeping a close eye on their progress. Thanks for tuning in to Talk Tickers.
Thanks, everyone.